Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you. And a new series has started, new month is going to start, but markets today seem to have given up those morning highs, right?
Absolutely. A very good morning to you, Vinny. Rather good afternoon to you, Vinny. The markets have given up those morning highs, but they are now in the positive territory. Broader markets are the ones that actually eased much more when you compare to the benchmark indices. The broader markets have eased around 1% or so from the day's highest point. But yes, brand new series coming in, and actually markets are holding their position, awaiting the big event that is going to take place come next week. Tomorrow you'll have the exit poll on June 3rd, that is Monday. You'll have the markets react to the exit poll, and June 4th is the verdict.
Absolutely. June 4th is the verdict, and Cheryl, next week is really exciting, not only election results, but because we have the monetary policy, RBI monetary policy, Fed, as well as ECB. So I am assuming, I hope this volatility does not last a bit longer, but we're keeping an eye out on that today. 0.2% of gains for the Nifty. But let's get started with all the stocks that have been buzzing in trade on the back of news flows and technicals. And on the technicals, we do have Foram M.Chheda joining in with us, while from the research team, Jina is joining in with us. A very good afternoon to both of you all as well. And I will start with the first stock that's in focus, and that's Welspun Corp. Now, the pipe manufacturer, when you look at it, overall has seen a fall today in the stock price. Why? Because we have seen a fall in terms of the numbers for the revenues of the company. When you're looking at it on a quarter-on-quarter basis, the revenues have seen a decline of almost 6.1%, while year-on-year basis also we're seeing a decline in terms of the top-line growth of the company. I beg your pardon, year-on-year basis it's an increase, but quarter-on-quarter basis we're seeing a decline for the company. Other than that, let's look at in terms of overall what we're seeing for the profits of the company. Profits of the company have also seen a bit of a decline of 2.2% sequentially, and margins have seen a contraction of around 230 basis points. Operationally also seems like a weak set that has come in from Welspun Corp. EBITDA down by almost 30% is what we could say. Now, other than that, when you're reading in terms of the management commentary also, they shared that for FY24, yes, they managed to surpass their growth guidance, but yes, there are global macroeconomic challenges, geopolitical tensions which are there. And though going forward, the chairman of the company said they're confident of improving the DI pipe segment as well as the Syntex business of the company going forward. FY25, they're expecting a growth of around 17,000 crores versus what we saw in FY24 was 17,582 crores. So bit of a subduedness in terms of the guidance, and that's why we're seeing the fall.
Yes, absolutely. The guidance is a cause of concern coming in for Welspun Corp. But for Zomato today, what is the cause of concern? Let me outline that to you, because there looks like there is going to be competition in the quick commerce space, with JioMart actually looking to start at 30-minute delivery services by June, and it'll be the first phase of delivery service will be grocery based. Remember that Zomato has been doing exceedingly well in that particular area with the Blinkit acquisition as well. But Macquarie's come out with a note on Zomato, where they're maintaining an underperformed rating, and the target is at 96 rupees per share. They're saying the competitive intensity is now rising, with JioMart also entering the space. They're saying multiple incumbent e-commerce platforms have announced and renewed their ambitions in the quick commerce space. They're also saying they're considering Blinkit as an efficient operator, but despite the large potential TAM of the Indian retail, and with rising in the competitive intensity, they're continuing to see downside to the consensus estimates when it comes to Zomato. So the rising competition a cause of concern, and that's what Macquarie has highlighted in its note, with a target of 96 rupees per share for Zomato.
Okay, but let's also listen in to the concerns that are there on the quick commerce side because of this JioMart entry. What does it mean? Furthermore, let's go across to Astha, who's here and who's giving us more details on that in terms of the number of stores that we could see or cities that Jio is planning.
Well, big news coming from the e-commerce sector, where Mukesh Ambani's controlled Reliance Retail, JioMart, is going to make its debut in the e-commerce platform delivery services from June. Yes, you heard it right. It's diving into the e-commerce platform delivery services and giving competition to the existing players, which includes Blinkit, Zepto, Instamart and many more, big basket as such. Talking about the JioMart e-services, it will start in phase 1, which will only include the groceries and phase 2 after it over with the phase 1, that it will include non-groceries as well. So by end of 2024, the JioMart e-services platform will include the both grocery and non-groceries services as well. Talking about their expansion, they are starting their services in 8 metro cities, including 68 pin codes, and they have planned to expand their services across 1,000 cities as well. Talking about their USP, their unique selling point, is the price, which will give a big competition to the existing players as well. Also, for optimizing deliveries, they are using technology-based platforms, which is Find and Locus, which will help the e-commerce platform to deliver their commodities very soon. Talking about the name, the formal name of the platform delivery services, it is not announced just yet, but soon we will be having the formal announcement of the name, and we'll tell you what's the formal name of this delivery services as well. So yes, the new player diving into the e-commerce platform, which will be a very big competitors to the existing players, Instamart, Zepto, Swiggy, which is already a big industry for the e-commerce sector, especially for the delivery services of the commodities. But now as JioMart is coming in, there will be a very lot competition in the e-commerce sectors, and let's see how the players are going out.
All right, thank you so much for that, Asta, for actually setting into context why Zomato is actually under pressure in trade today. All thanks to that, most likely JioMart also entering the quick commerce space. But Foram, coming to you, Reliance Industries. How is this one looking on the charts? When you ask Reliance Industries, everyone will definitely give only one word answer, the best stock for the long term. But what's your take coming in on the charts, on the technical front? Do you think now it's the best time to enter this one?
Well, hi, good afternoon, and thank you for having me on the show. Yeah, it's actually, since you've seen so much of volatility overall into the market, it becomes a safe stock to start investing. Technically speaking, that the stock price has remained in a very consolidated range between 2780 levels to around 3000 levels. That's nearly 8%. And from its recent highs also of 2,980 odd levels, which was in the past few trading sessions, maybe around 7-8 trading sessions back, and we've seen the stock price retracing. So it's moved below the two moving averages of 50 as well as 100, but the overall trend from a long-term perspective yet remains bullish. So since now it's moving towards the lower range of the consolidation, it becomes a very safe investment. One can consider buying maybe not the entire quantity, but consider buying 25-30% and add in more at 2,800 levels. So that is a good attractive level to add in. And one can maintain a very strict stop loss if it's from a trading perspective. If somebody's taking, then at around 2775 should be the stop loss. And the higher target can be closer to a level of 2980 initially, which will be the upper side of the range. So hence it's a safe bet on Reliance Industries.
Okay, safe bet on Reliance Industries, but let's move on and talk about Titan, because they do have their analyst day meet today, and there's some key highlights that have come in. The meet is still underway. Let's go to take it to Chennai to give us those highlights that are happening, because we've seen the stock actually fall off from the day's highest point.
Well, as the Titan held its analyst day meet, and here are some key takeaways. They aim to take the eye care segment revenues to 2,000 crores by FY27, and they aim that the EBIT for this by 27, the EBIT for 2,000 crore revenue will be around 12%. They are also targeting volume growth of around 3 times in wearables, 2 times volume growth in fragrance, and 3 times volume growth in women bags between FY 2024 to FY 2027. Now, if you talk about the jewelry segment, they are taking up an ambition of around taking market share of 10 to 11% by FY 2027. Moving on, they are planning to target the Tanaria plan to add stores, about 25 to 30 stores every year for next couple of years, and they're targeting to almost double their international revenue segment business from which is currently stand at 2% to 5% in coming years. They also aim to double Raga watches turnover in 2 to 3 years. So these are some key takeaways from the meet. And if you see the stock was trading up around 2%, but it seems like it's been coming down a bit.
All right, so that is all about Titan then. Forum, let's talk about Axis Bank, and how is this one looking on the charts to you?
Well, yesterday we did see the banking space outperforming the Nifty 50. And in fact, now today it's more of a consolidator, very range-bound movement, what we are seeing in some of the banking stocks. So as far as Axis Bank is concerned, technically it did take support at around 1,100 levels at the beginning of this current month. and post that it did experience a good upside momentum by around 7 to around 8%. Since then, in the past 3 to 4 trading sessions, we are seeing a bit of a retracement. So, as per the Fibonacci retracements, it's retraced nearly around 50% of its entire move from 1100 levels to nearly 1190 odd levels. So, since this 50% retracement acts as a very good support, in the past 3 trading sessions, the lows are almost at these levels. It becomes safe to start investing from a longer term perspective. Thus, one can consider buying or investing at current levels. But however, a strict stop loss should be considered to be maintained below the levels of around 1130 and look for a higher target of closer to 1200 to 1220.
All right, let's move on then. Let's talk about Geo Financial, and this particular counter is in focus because they've unveiled their Geo Finance app in beta version, which is marking a significant step forward in the digital transformation journey for the company to enhance the financial well-being of every Indian, is what they put it out in their exchange filing. But the fact that they have unveiled the beta version of the Geo Finance app, you saw the stock actually open on a very firm footing, but from there on has given up all of its gains. Now it's trading lower by about 4% as we speak.
Okay, let's move on then to the next stock that we should highlight today, and as Forum is highlighting for us is Apollo Tyres. Forum, on the charts, what's Apollo Tyres looking like in terms of an up move that one should expect here? Last 6 months we have seen an uptick of almost 9 to 10%, so not much of a jump up there, right? What should we now envisage in terms of a target price that one should be keeping?
Well, Apollo Tyres has been moving actually in a technical pattern of a long symmetrical triangle, and it's more like a consolidation from a longer term perspective. Currently, the stock is very close to the 200-day moving average also, which is like acting as a good support and a safe level to start investing because it is just showing that once it's taking support, we are seeing a bit of a rebound, indicating that the underlying trend is bullish. So from a risk reward perspective, it's a good level to enter into the stock, and from a safe perspective also, because we've seen lately a lot of volatility. However, this stock has not really seen or affected from an investor's point of view. So thus one can consider investing at these current levels and maintain a stop loss below the levels of around 430 and look for a higher target of closer to 500.
All right, so that's the take coming in on Apollo Tyres. But on that note, we'll slip into a break on this edition of Market Fatafat. But here's your chance to take advantage of the market swings after exit polls. On 3rd of June, top chartists and market experts on ET Now will share their stock strategies to help you navigate any election-related volatility. So we will ask our chartists which stocks, if they fall by 5%, will they buy, or which stocks, if they will they sell if those stocks rise by 5%. Stay tuned to ET Now all through the day for the best poll positions.
Welcome back. You're watching Market Fatafat on ET Now, and let's keep it going with the next stock that we're going to talk about, RR Kabel. That is a stock we spoke about yesterday as well, because there was a bulk deal, large bulk deal that happened over there, where we know that a PE firm, TPG Asia, actually sold around 5% stake in the company, or around 56 lakhs is what we could say, and this was at around 1,700 rupees per share. So total deal value was at around 958 crore rupees. Now, of this, who are the buyers? We have marquee buyers who have come in. We have Tata Mutual Fund, Goldman Sachs, Citigroup, Morgan Stanley, ICICI Pru, Blackstone, HDFC Standard Life, among some of the other names who have entered into the stock. So on the back of this move, we are seeing that RR Kabel is today in focus, and let's not forget that TPG Asia had purchased around 21% stake, so now they had offloaded some bit of a stake in RR Kabel. 5% stake is what they have offloaded. Keeping an eye out on this one.
All right, let's talk about Muthoot Finance, then Jinay. And why is this one in the spotlight today?
Put it a good set of numbers. The NII, which is net interest income, stood at 2,532 crores this quarter versus 2,043 crores last quarter during same period, which is up around 24% on Y-on-Y basis. Also, the net profit saw an uptick of around 17%, stood at 1,182 crores this quarter versus 1,009 crores last quarter during same period. The company reported a highest ever consolidated loan AUM, which stood at 89,079 crores, which was up around 25% on year-on-year basis. The company also reported a gold AUM of about 11,003 crores, which was up around 18% on Y-on-Y basis. Now, moving ahead, the company reported some growth opportunities and growth drivers for the company. They say that the tier 2 and tier 3 focused distribution system is something which will be aiding the growth for the company, along with the higher credit rating, which will help the company to take up loans, raise funds at a competitive rate. Also, company cites that increase in affordability driven by GDP growth rate and stable property price is something opportunistic for the company going ahead. If you look at the stock is trading about 1.3% up during the current market.
Right, but let's move on to the next stock, that is Exide Industries. Forum, on the charts, what is Exide Industries looking like at 500 rupees per share with an uptick of almost 70% in the last 6 months? Is it still a buy?
Yes, in fact, if we talk about since March, the bottom of the stock was closer to 290 levels, which was very close to the 100-day moving average. After that, the stock has picked up a very good momentum and it formed a high of nearly 480 levels by middle of April. And since then, the stock retraced almost just 23.6% as per the Fibonacci retracement levels and has been consolidating. So entire 1 to 1.5 month of consolidation, and then we have seen a bit of momentum which was picked up last week. And currently it is just little consolidating, just retracing very close to the breakout level of around 480. Currently the stock price is trading at 500 levels. So it brings in that buying opportunity because technically it's just retesting those levels. In spite of this volatile markets, we've seen that it's a very consistent and a gradual rise in the stock, and it seems to be moving in a very disciplined manner. Thus, I would suggest a buy closer to a level of 480 to 485. A strict stop loss should be placed at around 469, and one can look for a higher target of closer to 525 to 530 levels.
Right, let's shift focus then to an earnings candidate, that is Lux Industries. That particular counter actually saw a very sharp up move on an intraday basis. It saw an uptick of as much as 7% or so. Now the stock has actually cooled off from those elevated levels, and the reason why the stock actually saw that huge spike is because of its earnings. If you look at the numbers, the profits actually came in higher by about 71% on a year-on-year basis at around 55.9 crore rupees. If you look at the revenue, it was a bit lower on a year-on-year basis, about 1.13%, coming at around 708 crore rupees. The margins also have come in extremely healthy, 10.79% versus 6.24% on a year-on-year basis in the quarter gone by. So yes, on back of good set of numbers, you've seen Lux Industries actually see a good up move as much as 7%. Now it's cooled off, but holding on to gains of about 2% or so, Vinny.
Okay, let's move on to the next stock, and that is Page Industries. Forum, Page Industries, when you look at it in terms of the stock price, today surely is down and out, but when you're looking at it for the last 6 months also, nothing sort of an excitement that we're seeing, right, for Page Industries. What are you expecting now here?
Well, as you rightly said, in the past 6 months, it has underperformed and not done well. In fact, it was in a downtrend. So, in fact, if I talk about technically levels, so it had peaked out at around 39,300 odd levels at the beginning of the year, and since then there has been a corrective decline. And this decline halted near 33,000 or 33,000 to around 33,070 to be precise in the month of March. And since then we have seen a bit of a rebound. The stock price has now started to form like a higher bottom, and that is showing the first initial signs of change in trend from down to sidewards. Now, yesterday we saw a good up move in the stock by closer to around 4%, and because of the dividend, we are seeing that today the stock price is down by around 4%. However, the change in trend is also being observed where the stock price yesterday moved above the 200-day moving average. So when a stock price is moving above the 200-day moving average, it's showing that it's changing its underlying trend, which was weak or sidewards to now bullish. So these signs are indicating some bullishness, and hence I'm suggesting a buy at these current levels. I'm waiting rather for a lower level of around 35,800, which coincides with a 100-day moving average. A 6 stop loss should be placed below the levels of around 34,900, and one can look for a higher target of closer to 39,500.
All right, moving on then, Jinay, let's talk about PTC Industries. Why is this in the spotlight today?
Well, yes, Antique has came up with an initiated report. They have initiated a buy rating with a target price of rupees 13,010 per share, which presents a return potential of about 67%. Now, they believe that the whole glitter in the space is about titanium, which is at the heart of aerospace manufacturing for the company. What they also like is the closely guarded manufacturing technologies, which aids company getting higher margins. They also like the casting segment. They believe that the casting segment will prove as value addition to the company's numbers going ahead. And if you look at the current geopolitical situations, they believe that they are extremely on the side and on the favorable for the company, which is PTC Industries. And they also say that the agreement and partnership with other companies provides a long-term order book visibility for the company. And if you look at the stock is trading about 7.8% in today's market.
All right, so that is PTC Industries. That is in focus, not on back of earnings, but on back of brokerage report. But on that note, we slip into a break on this edition of Market Fatafat. When we come back, we'll start outlining some more stocks in focus. Don't go anywhere.